Beyond Meat has once again become one of the most talked about stocks in the market, but this time it's not just about a surge, it's about payoff, pause, and potential reset. After skyrocketing in recent days, BYND is showing signs of fatigue. Yet underneath all the drama, the core ingredients that fueled the rally are still in place. The question now is simple: what happens next? Over the past week, Beyond Meat's share price went on an incredible tear, driven by a textbook short squeeze setup and a flood of retail energy. The stock exploded higher, fueled by huge short interest and massive social media buzz. For a moment, it looked unstoppable, a return to the wild days of meme stock mania. But then, just as quickly as it started, the momentum stalled. On Friday, the stock dropped about 23% to close near $2.18 per share, and it even slipped further in after-hours trading. That's a clear signal that momentum is cooling. But does that mean it's over? Not necessarily. Right now, we're in that delicate zone between a completed squeeze and a potential reset. The easy part of the rally may have passed, but the structural setup, high short interest, heavy retail attention, and a potential earnings catalyst on the horizon still exists. This is when traders shift from chasing the move to watching the setup. Let's take stock of what's new. First, Beyond Meat has announced that it will report its third quarter financial results on November 4th, after the market closes. That gives traders a concrete date to circle on their calendars. It's an upcoming event that could easily become the next ignition point, especially if the numbers or tone surprise the market. Second, short interest remains massive. Recent data suggests that more than half the stock's tradable float is still sold short. Some analytics even estimate that the effective short positioning could exceed the number of shares available to trade. When you get that kind of imbalance, it means there's still explosive potential in the right conditions. But it also means traders need to tread carefully. After such a huge initial run, many shorts have already covered, which reduces the immediate squeeze pressure. What remains now is a mix of tactical traders and die-hard shorts who believe the company's fundamentals will ultimately drag it lower again. And those fundamentals are still tough. Beyond Meat remains heavily indebted. Demand for plant-based meat products has weakened over the past year. Costs remain high, and the company recently diluted shareholders through a debt-for-equity exchange. Those realities haven't gone away. So when you look at BYND today, this is still a momentum trade, not a turnaround investment. It's a story built on positioning and psychology, not a reflection of improving business performance. That brings us to where things stand technically. After such a steep sell-off, the market will look for a new equilibrium. Right now, the zone between $2 and $2.30 appears to be the key support area. If BYND can stabilize there and consolidate, it sets the stage for a potential bounce. On the flip side, if it breaks below $2 with heavy volume, the probability increases that we'll see another leg down toward $1.50 or even lower. On the upside, a break above $3.50 to $4 with strong volume and renewed retail momentum would be the signal that the next short squeeze attempt could be forming. Without that kind of confirmation, this current pullback might just evolve into a quiet consolidation phase. Volume and sentiment will tell the story. Watch how trading activity behaves over the weekend and early next week. If volume remains high, if message boards and social platforms continue to buzz, and if call option volume picks up again, that would suggest there's still fuel in the tank. But if chatter fades and liquidity dries up, it's more likely that this rally will continue to unwind gradually until a new catalyst appears. So how should a trader approach this moment? If you've already been riding the wave from lower levels, this is the time to protect gains. Tighten stops. Trim partial positions. Lock in profits where possible. The parabolic phase of the rally has likely passed, and what follows is typically a tug-of-war between opportunistic bulls and stubborn bears. If you're considering entering fresh, patience is critical. Don't chase just because it's cheap. Wait for confirmation, either a rebound on volume or evidence that retail sentiment is reigniting. The key is to catch the reignition, not to guess when it will happen. Until then, think of BYND as a setup, not an active play. Now, let's talk catalysts. The next major one is earnings on November 4th. That's the focal point for most traders now. If Beyond Meat surprises with better-than-expected revenue, stronger guidance, or even a more optimistic tone from management, that could light the next fuse. On the other hand, if results disappoint or management issues cautious commentary, the air could come out of this trade very quickly. In short, the company now controls whether this remains a trading phenomenon or fades back into obscurity. What about the short-term outlook? There are three possible scenarios. Scenario 1, the reset and rebound. The stock holds above $2, volume returns, and retail chatter spikes again. Short sellers who thought they had a breather start feeling pressure once more, and a second wave rally lifts the stock back toward $4 or $5. That would be the short-term bullish outcome. Scenario 2, the pause and drift. The stock trades sideways between $2 and $4 for several sessions, waiting for fresh news. Sentiment cools, volume drops, and volatility compresses. This would reflect a classic consolidation phase before the next move. Scenario 3, the breakdown. Support gives way, volume fades, and retail traders lose interest. Without a catalyst, BYND drifts lower toward $1.50 or even below $1. That would mark the end of the speculative cycle, at least for now. Of those, the most likely near-term path is Scenario 2, a pause followed by a potential new leg depending on the catalyst. But traders should remain open to the possibility of a sudden revival. Momentum trades can reignite quickly, especially when there's this much short interest still on the table. So how do you prepare? Use the weekend to monitor sentiment. Check how much BYND is being discussed across trading communities. Look for rising call option activity. Keep an eye on whether influencers or trading commentators begin mentioning it again. If chatter starts heating up Sunday night or early Monday, it might be the prelude to another run. If instead the conversation goes quiet, it might mean the trade needs more time to reset. Whatever you do, approach this with defined risk. Keep position sizes small. Remember that Beyond Meat remains one of the most volatile stocks in the market. Big moves can happen in both directions, sometimes within minutes. Protecting capital is always more important than chasing every rally. In a broader sense, Beyond Meat's story this month has become a fascinating case study in market psychology. It shows how fast sentiment can shift from despair to euphoria and back again. It also shows that retail traders still have the power to move individual names dramatically when conditions align. The difference between success and failure in these trades often comes down to discipline and timing, knowing when to ride the wave and when to step off. So, as we head into the new week, the narrative is clear. Beyond Meat squeeze may be cooling, but the potential for another push still exists. The key lies in whether the crowd comes back for round 2, and whether the company's upcoming earnings give them a reason to. For now, all eyes remain on that November 4th report. Between now and then, expect volatility, speculation, and plenty of debate across retail forums. To wrap it up, Beyond Meat's explosive run has transitioned into a test of endurance. The squeeze has paused, not necessarily ended. The fundamentals remain weak, but the trade setup is alive. The game now is patience. Watch the data, respect the levels, and trade the signals, not the noise. We'll continue to follow this closely next week. Until then, stay focused, stay objective, and remember, momentum may rest, but it rarely disappears entirely.